Welcome to our Crypto News in 10, a daily podcast bringing you the latest news about crypto in under 10 minutes. It's Saturday, March 21st, 2026, and even on a quieter weekend, crypto keeps moving. Today, we're digging into a dividend hike from Bitcoin's biggest corporate accumulator, a new 10 times leverage product from a US exchange in Europe, two policy stories in South Korea and Russia shaping the next phase of crypto market structure, and a $20 million mining dispute that just got settled in Texas. Let's get you caught up in 6 minutes. First up, Strategy, the Bitcoin treasury-focused company chaired by Michael Saylor, just bumped the monthly dividend on its perpetual preferred, the STRC, Stretch, to 11.5% for March, up from 11.25% last month. The company confirmed the new rate after Saylor flagged it on social media, saying it's part of a standing policy to reset the yield monthly. Why it matters? STRC has become a financing lever for the firm's ongoing Bitcoin accumulation, and a richer coupon suggests Strategy remains comfortable tapping capital markets despite 2026's price chop. Earlier this month, the company said it added 17,994 Bitcoin between March 2nd and March 8th at an average price of $70,946, pushing holdings above 738,000 Bitcoin, north of 3.4% of the capped supply. Bigger coupon, bigger conviction, and a reminder that corporate balance sheet demand is still a pillar under this market. Sources: Cointelegraph and The Block. Story 2. Coinbase is pressing its derivatives edge overseas. The exchange rolled out 10 times leveraged Bitcoin and Ether perpetual futures for European users this month, expanding access to higher-geared products, while also telegraphing plans to offer traditional equities trading later in 2026. Context matters here. After a rough first quarter for prices, exchanges are competing on product breadth and capital efficiency. For active traders in the EU, 10 times leverage on a regulated venue from a US brand could pull volume from offshore platforms. Watch liquidity migration, where spreads tighten and funding stabilizes. That's where the pros will park. Source: DL News. Number 3. South Korea is moving to unbundle ownership power in its exchange sector. Regulators and lawmakers have agreed in principle to cap any major shareholder's stake in a domestic crypto exchange at 20%, with limited exceptions up to 34% via enforcement decrees. The push follows governance and internal controls concerns, including that headline-grabbing mistaken transfer that sparked scrutiny, and would force restructuring across the Big Five if enacted as described. Bottom line, Korea is still one of crypto's most influential retail markets. An ownership cap could reshape incentives, risk management, and ultimately listings policy there. Source: The Block. Before we continue, here's a message from our sponsors.
Need elite developers fast? Elite Coders connects you with rigorously vetted senior engineers in 24 to 48 hours. Staff augmentation, dedicated teams, or full project delivery, we've got you covered. Visit elitecoders.co to get started today.
All right, let's get back to it. Fourth, Russia's central bank is signaling a new on-ramp for institutional crypto venues. Officials have floated a notification process that would let banks and brokerages run crypto exchanges by extending their existing financial licenses, rather than applying for fully new ones. The draft approach would recognize crypto and stablecoins as tradable assets, while still banning their use for domestic payments. If this proceeds, expect incumbents with compliance muscle to step in, further institutionalizing ruble-to-crypto rails, even as Western sanctions remain a constant backdrop. Source: The Block. And fifth, a courtroom cloud finally cleared in Texas mining country. Riot Platforms and SBI Crypto reached a $20 million settlement, resolving a long-running dispute tied to hosting and power at a large Bitcoin mining facility. Why you should care? Miners' margins this year are being squeezed by price volatility, energy swings, and rising competition from AI data center conversions. Resolving a costly legal overhang is one small but telling signal that operators are shoring up balance sheets and focusing on scale, uptime, and power contracts ahead of the industry's next capital expenditure cycle. Source: The Block. Quick recap before we go. Strategy sweetened its preferred dividend to 11.5% as it keeps buying Bitcoin. Coinbase switched on 10 times leveraged Bitcoin and Ether perpetual futures for Europe. South Korea's policymakers coalesced around a 20% ownership cap for exchanges. Russia is teeing up a bank-led path to run crypto exchanges by notification. And miners Riot and SBI Crypto put a $20 million fight to bed in Texas. That's your weekend catch-up for Saturday, March 21st, 2026. Stay nimble out there, and we'll be back tomorrow with the next wave of moves. Thanks for listening, and see you tomorrow.